Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Broadridge Financial Solutions, Inc. quarterly report. Broadridge Financial Solutions provides a wide range of businesses and services to the financial industry. At its core, the company offers investor communication solutions that include proxy materials distribution, voting processes, and regulatory communications for various clients such as banks, broker-dealers, corporations, and funds. The company's Investor Communication Solutions segment also provides data-driven solutions, content management platforms, and omnichannel distribution of information. Additionally, it offers mutual fund and exchange-traded funds trade processing services, annual SEC filing and capital markets transaction services, registrar, stock transfer, and record-keeping services, as well as customer communication solutions. The Global Technology and Operations segment provides solutions that automate the front-to-back transaction lifecycle for various financial instruments such as equities, mutual funds, fixed income, foreign exchange, and derivatives. This includes order capture and execution, trade confirmation, margin, cash management, clearing and settlement, reference data management, reconciliations, securities financing, and collateral management. Furthermore, this segment offers business process outsourcing services, technology solutions for portfolio management, compliance, fee billing, and operational support, as well as capital market and wealth and investment management solutions. Overall, Broadridge Financial Solutions provides a comprehensive suite of businesses and services that cater to the needs of the financial industry. The stock price of Broadridge Financial Solutions, Inc. (BR) has experienced a significant decline over the past year, exceeding -21.49%. This drop can be attributed to several key news events that have impacted the company's performance. One major factor contributing to the stock price drop was the anticipation of lower Q2 fiscal year 2026 earnings and underperformance against broader market indices. Analysts predicted a decrease in non-GAAP profit, which ultimately materialized when Broadridge reported its second quarter results. The adjusted operating income margin declined by 110 basis points, primarily due to reduced event-driven revenues. Additionally, the company's investment phase in tokenization and digital assets has put pressure on near-term margins, causing investor caution and a dampened stock price. This strategic move may have been seen as a risk by investors, contributing to the decline in Broadridge's stock value. The combination of these factors has led to a significant drop in the company's stock price over the past year. Broadridge Financial Solutions, Inc. maintains a market capitalization of $22 billion, broadly in line with the industry peer group. Broadridge Financial Solutions, Inc. trades at a higher price-to-earnings ratio of 21 times and a higher price-to-book ratio of 8.24 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 69% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 2.1%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for a company can be identified through various factors. On the growth side, key contributors include expansion into new markets such as North America and Europe, increase in regulatory communication solutions, adoption of data-driven fund solutions, and growth in corporate governance and sustainability services. Additionally, recurring revenue from net new business and internal growth, acquired recurring revenue from integrated assets, position growth, internal trade growth, and the implementation of an omnichannel distribution platform for regulatory, marketing, and transactional information have all contributed to revenue growth. On the decline side, factors such as event-driven activity impacted by financial market conditions and regulatory compliance requirements, fluctuations in the timing and levels of event-driven revenues, lower mutual fund proxy revenues, and a decline in retirement and workplace products have led to revenue decline. These drivers highlight the importance of adapting to changing market conditions and regulatory requirements to maintain revenue growth. Net income and profit margins. A shift in trends. The financial performance of a company has undergone significant changes over the past year. Net income has seen a substantial increase from $142.4 million to $284.6 million in 2025, marking a notable growth. This upward trend is also reflected in the 6 months ended December 31, 2025, where net income increased by $227.8 million compared to the same period in 2024. However, this positive change in net income is not mirrored in profit margins. The operating margin has decreased slightly from 13.1% to 12% for 3 months and remained relatively stable at 11.9% to 12% for 6 months. Furthermore, the effective tax rate has increased, contributing to this decline in profit margins. The effective tax rate rose from 19.1% to 23.1% for 3 months and from 19.6% to 22.9% for 6 months. The reasons behind these changes are not explicitly stated, but it is clear that the company's financial performance has undergone a shift in trends. While net income has seen significant growth, profit margins have decreased due to an increase in effective tax rate. This dichotomy highlights the complexities of financial performance and the need for further analysis to understand the underlying causes of these changes. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, net cash flows from operating activities have been consistently reported as $367.1 million for the year 2025. This is confirmed across multiple pages of the document, including page 6 and other supporting pages such as 58, 62, 65, and 68. The generation of positive operating cash flow suggests that the company's core business operations are generating sufficient funds to cover its expenses and investments, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, total debt proceeds decreased from $740.3 million to $538.5 million, while total debt decreased from $3,252.3 million to $3,055.3 million. The principal amount of term loans also saw a substantial decrease from $2.55 billion to $1.3 billion. Furthermore, the debt level for fiscal 2020 senior notes and fiscal 2021 senior notes has been reduced. In terms of interest expenses, there has been a notable decline. Interest expense has decreased significantly, with a reduction of -$23,800,000 in the 3 months ended Dec 31, 2025, compared to -$32,700,000 in 2024. The 6 months ended Dec 31, 2025 also saw a decrease of -$48 million, down from -$65 million in 2024. Additionally, interest expenses decreased from $520.40 to $280, and interest expense net has declined by $8.9 million, -27%. Overall, the company's debt level and interest expenses have shown a substantial decrease over the past year. Management is optimistic about the company's outlook, citing several key strategies for success. Retaining clients and attracting new ones are crucial, as well as adapting to technology changes that meet the demands of clients. The company plans to achieve this through strategic acquisitions, focusing on core business activities and investing in technology. In particular, management expects recurring revenue growth to be a key metric for evaluating performance, targeting an 8% growth rate. They also see potential in digital assets in the Canton network, with plans to convert Canton coins to cash. With sufficient cash reserves, management is confident in their ability to fund future activities through a combination of operating cash flow, existing cash, and capital market borrowings. Overall, the company's strategy is centered around driving growth through strategic acquisitions, investing in technology, and leveraging digital assets. Management is committed to meeting the evolving needs of clients and staying ahead of technological changes. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends to its investors. The financial records show that the company has consistently paid out significant amounts in dividends over the years, with figures ranging from $196 million to $216 million. In addition to paying dividends, the company has also taken steps to return value to its shareholders through share buybacks. This involves purchasing a portion of its own shares on the market, which can help boost investor confidence and increase the value of remaining shares. The records indicate that the company has indeed engaged in significant share buyback activity over the years, with purchases totaling hundreds of millions of dollars. That concludes the financial summary for Broadridge Financial Solutions, Inc. Feel free to comment below, and I will be happy to answer them when possible.